Welcome back to the channel. Today we're going to dive into the captivating world of the Indian stock market and explore the fascinating ways in which investor sentiment is shaking things up. Right now, stocks like Ola Electric are soaring to new heights, defying the odds and leaving many investors scratching their heads. Despite their shaky financials, these stocks are experiencing astonishing price surges. This phenomenon highlights just how influential investor sentiment can be in shaping market dynamics. In the traditional investing world, financial fundamentals like earnings, revenue, and profitability are the primary drivers of stock prices. However, in sentiment-driven investing, it's a different story. Investor sentiment, or how investors feel about a particular stock or the market as a whole, can have a profound impact on stock prices. This is clearly evident with Ola Electric, where investor sentiment is driving substantial price increases, even in the face of weaker financials. The Indian stock market has increasingly become a sentiment-driven market where stock prices are influenced more by public perception than by underlying financial performance. So what factors contribute to this shift? Firstly, media hype plays a significant role. With advancements in technology and the rise of social media, news and information travel faster than ever before. This means that one piece of positive news or a viral rumor can quickly and dramatically impact investor sentiment. Secondly, investor enthusiasm has been a driving force in sentiment-driven movements. When investors become excited or overly optimistic about a particular stock or sector, it can lead to inflated stock prices that may not align with the company's true value. Lastly, the increased involvement of domestic institutional investors, DIIs, has further fueled sentiment-driven trends. DIIs are entities like mutual funds and insurance companies that invest on behalf of individuals and institutions. As they contribute a significant amount of liquidity to the market, their actions and sentiment can heavily influence stock prices. As an investor, it's crucial to understand and adapt to this sentiment-driven landscape. So how can you navigate this trend and adjust your investment strategy accordingly? Firstly, staying informed and keeping a close eye on media and market trends is essential. By being aware of the latest news and developments, you can assess the impact on investor sentiment and make more informed decisions. Secondly, consider diversifying your portfolio to include a mix of sentiment-driven and fundamentally driven stocks. While sentiment-driven stocks can be highly volatile, they also have the potential for significant gains. By combining them with fundamentally strong stocks, you can mitigate risk and potentially maximize returns. Lastly, remember to keep a long-term perspective and not get swayed by short-term market fluctuations driven by sentiment. Investing based on solid fundamentals is still crucial for sustained success in the market. So if you're ready to uncover the secrets behind today's market trends and learn how to adapt your investment strategy to navigate this sentiment-driven landscape, hit that subscribe button and let's get started. Don't forget your notepad, because we're about to dive into the power of investor sentiment in the Indian stock market. Understanding market sentiment in the world of investing, market sentiment plays a significant role in driving stock prices. There are various factors that influence market sentiment, each playing a crucial role in determining the direction of the market. First, let's talk about fundamental factors. These involve a company's financial health, including earnings, revenue, and overall stability. An example of this is seen in established banks like HDFC Bank and Kotak Mahindra Bank, which may not see immediate price increases despite their strong fundamentals. Next, we have technical factors. Technical analysis uses price charts and patterns to forecast future movements. Stocks showing positive technical indicators may experience price hikes based on these predictions. Sentiment factors are also crucial. Sentiment-driven stocks often see price changes based on public perception rather than actual financial performance. Positive sentiment can push prices higher, even when fundamentals are lacking, and vice versa. Now let's delve into behavioral biases and market sentiment. Herd behavior is a common phenomenon where investors often follow the crowd, causing prices to inflate during bullish trends and plummet during bearish ones. It's important to be aware of herd behavior to avoid buying at peaks or selling at troughs. Overconfidence is another bias to watch out for. In a rising market, investors might become overly confident, increasing their risk-taking. It's essential to recognize and mitigate this bias to maintain a balanced investment approach. When it comes to examples of sentiment-driven stocks, we can look at companies like Ola Electric and Adani Enterprises. Despite weak financial metrics, Ola Electric's price is soaring due to positive sentiment. Similarly, Adani Enterprises has a high price-to-earnings PE ratio driven by sentiment rather than robust valuation. SME IPOs in India are also attracting significant interest and oversubscription primarily due to sentiment rather than fundamental evaluation. So what are the reasons for high sentiment in the Indian market? One contributing factor is the rise of domestic institutional investors, DIIs, which have significantly increased their market presence. In contrast, foreign institutional investors, FIIs, have been net sellers, intensifying sentiment-driven market movements. Retail investor participation has also grown, fueled by previous high returns and market optimism, further amplifying sentiment-driven price changes. Additionally, limited investment options, such as lower returns on traditional investments like fixed deposits, FDs, and bonds, have pushed many investors toward equities, enhancing sentiment-driven investing. This shift is also influenced by the low interest rate environment and the quest for higher returns. In conclusion, understanding market sentiment is crucial for investors to make informed decisions. By being aware of the various factors and biases influencing market sentiment, investors can navigate the markets more effectively and avoid falling prey to irrational exuberance or panic-driven selling. In the world of investing, managing risk and building a well-balanced portfolio are crucial for success. Balancing stable, fundamentally strong investments with higher risk, sentiment-driven stocks is essential for managing potential volatility. A diversified portfolio that includes both fundamentally sound stocks and speculative, sentiment-driven investments helps spread risk and take advantage of varying market conditions. When it comes to different types of investments, there are several strategies to consider. Angel investing in early stage startups involves high risk and requires thorough due diligence. It is suitable for those who can provide strategic value beyond just capital. SME IPOs offer potential high returns, but come with significant risks. It's advisable to limit exposure to such investments and evaluate each opportunity carefully. Investing in unlisted companies, preparing for an IPO, such as Swiggy or HDB Financials, can be less risky compared to smaller SMEs, as these companies are often more established with clearer profitability paths. Waiting for the initial hype to settle before investing in newly listed companies allows for a more accurate assessment of their true value and potential. The impact of media and social media on market sentiment cannot be overlooked. Financial news and media coverage can greatly influence market sentiment, often amplifying price movements based on news cycles and headlines. Similarly, platforms like Twitter and Reddit can drive market sentiment through viral discussions and trends. Investors should exercise caution and verify information before making investment decisions. Regulatory changes and the global economic environment also play a significant role in shaping market sentiment. Government policies and regulatory shifts can influence investor confidence and drive prices up or down. Additionally, global economic trends and geopolitical events can affect investor sentiment in the Indian market. Being aware of these factors and their impact on local markets is crucial for making informed investment decisions. In conclusion, adopting sentiment-based investing strategies requires careful risk management, building a diversified portfolio, and staying informed about the impact of media, social media, regulatory environment, and global economic factors on market sentiment. By understanding these dynamics, investors can make more informed decisions and navigate the complexities of the investment landscape effectively. Navigating the current sentiment-driven market can be a challenging task, with investors' emotions often driving the market, it is crucial for us to adopt a nuanced approach to our investments. We need to strike a balance between sentiment-driven investments and fundamental analysis, while also maintaining a diversified portfolio. Staying informed about market trends is key in making wise investment decisions. By keeping track of the latest news and developments, we can better understand the market sentiment and anticipate potential changes. However, it is important to remember that investor sentiment can be influenced by behavioral biases, such as fear or greed. Being aware of these biases can help us make more informed and rational decisions. In addition to staying informed, it is essential to develop effective investment strategies. These strategies should take into account the sentiment-driven nature of the market and aim to minimize risks while maximizing returns. Continuous learning and engagement with investment communities can also play a significant role in enhancing our decision-making abilities and refining our strategies. Now let's circle back to how investor sentiment is shaping the Indian stock market and what it means for your investments. We have discussed various topics, from the rise of stocks like Ola Electric to effective strategies for navigating this sentiment-driven landscape. It is crucial to apply the insights gained from these discussions to our own investment decisions. If you found this video helpful, please give it a thumbs up and share it with fellow investors who may benefit from these insights. We highly value your questions and thoughts, so please feel free to drop them in the comments section below. We love hearing from you. If you haven't already, don't forget to hit the subscribe button and join our community for more market analysis and investment tips. We strive to provide valuable content that helps you stay informed and make wise investment decisions. Thank you for watching, and we look forward to seeing you in the next video. Remember to stay informed, invest wisely, and keep learning to stay one step ahead of the market.